Wondering how to afford payroll without killing your profit or your peace of mind? Today, I'm going to break down how to use Profit First to take the stress out of paying your team. I'm Abby Johnson, CEO of Matterhorn Business Development. I've worked with over 40 industries and revenues from under 6 figures all the way up to 15 million to help them implement Profit First. And a huge factor in this is how to manage the payroll expenses within this system. Payroll can feel like a gut punch. It's usually your biggest expense. It comes out all at one time. Your bank account looks nice and lovely and bloated, and within seconds, it's all gone. I'm not going to re-explain the whole Profit First system because I imagine if you've clicked on this video, you already have the basic idea of how the system is and what it works. If you don't know, we have a whole Profit First playlist you can check out. But within Profit First, you have the core 5 bank accounts: income, profit, owner's compensation, tax, and operating expenses. But the great thing about the Profit First system is you can adapt it to your financial needs. And a lot of my clients that have payroll like to have an additional payroll account. You've got this huge expense coming out, and it can be hard to financially plan when, like I said earlier, your account is inflated, but you've got this big expense coming out. My suggestion and what I usually do is break out payroll from the operating expense account. So without this method, let's say you do your allocations in the correct order, and at the end of the day, you have $30,000 in your operating expense account. That feels pretty good, $30,000, right? But 20,000 of that is actually going to payroll. So maybe you know that in your mind, maybe you don't, I don't know, but it's much easier if you segment out payroll to be able to financially plan, because if you have a separate payroll account, then what that would look like is your OpEx account has 10K in it and your payroll account has 20K. There's so many benefits to this. Now you can actually plan financially of whether you can afford something or not, which is a big component of the Profit First system. You can say, okay, I have 10K to pay bills, or I want to try to purchase something. Can I afford it in that 10K, etc. But now you have the relief that your payroll account is funded. You know, when payroll comes around again in a few days, the money is already there. Look, I know how stressful that number is. It can be a very big number, but now the money is already there. You don't have to worry or stress about it. So the way to actually implement this is open that additional payroll account, and then you're going to have to see what percentage your payroll is at right now. I have a whole video about handling your payroll percentage if it is too high, but what we like to see is about 30% payroll expense. Right now, I'm not going to talk about whether you're above or below that. The point is to start out, you need to find out what that percentage is right now. For this demonstration, let's say it's 30%. So if your OpEx is currently at 50% and you know 30% of that is for payroll, that's how you're going to allocate moving forward. So instead of putting 50% into OpEx, you're going to put 20% into OpEx and 30% into payroll. We do these percentages to account for the highs and lows of revenue. I'm sure you have big weeks, small weeks in between. Most businesses don't have the same amount coming in every week. So it's important to use these percentages because it will still fund your account with the money you need, but it's going to just take the correct percentage rather than a flat amount. So if you have a really big week, then you're going to have extra money being put into payroll that you might not necessarily need right now. If you have a really low week though, you're only going to be putting that same percentage, which may be a smaller dollar amount, into the payroll or OpEx account, but you have the correct dollar amount you need because using a percentage accounts for highs and lows. The other thing I'll note here is, if possible, I would have it set up to where all of your payroll taxes are being taken out at the time of payroll. I make this distinction because payroll taxes are actually usually paid to the government on a quarterly basis. Some of them, like unemployment, is even an annual basis, but you don't want that money sitting there and accumulating. It's great to have it there and know you can cover that quarterly bill, but I would prefer for that money to just be gone because there's no temptation, there's no confusion, the money is gone. So if you're using a payroll service, most of the time you can have this as a setting or a request where when payroll runs, they will withdraw the amount for payroll taxes at that time. And then when it's time to actually file and pay that money to the government, they will handle that for you. I highly recommend doing this because that money is not your money. We don't want it sitting around. Let's just get it out there, pay the bill now if you have that chance. All right, I hope this was helpful for for you and answered some questions. If you're new to Matterhorn Business Development, we help small business owners add at least $50K to their bottom line by implementing profit first in conjunction with proven operational systems. If you want to learn more about how we can do this for you, click the link below to book a call. Now, if you're wondering about how to properly pay your employees without overpaying or underpaying, I suggest you check out this video linked where we talk about how to pay your employees and set their salaries. I'll see you in the next video.